A big important asset management company in the world comes to mind when we hear the name BlackRock. Their actions can change whole markets. In the past few years, the crypto space has been closely watching BlackRock, especially since rumors spread that they were interested in XRP, Ripple's digital currency. But it's important to look past the shocking news stories about XRP hitting sky-high prices like $10,000 and instead focus on what's really going on. BlackRock's work with XRP isn't about hype or pump-and-dump scams. Large-scale integration of blockchain technology into the traditional financial infrastructure is the goal of this well-thought-out corporate project. This story really took off after Larry Fink, CEO of BlackRock, jokingly brought up XRP at a Federal Reserve meeting. His casual comment became a big deal very quickly. A lot of people in the crypto community were shocked by this one word. They thought BlackRock was going to start buying a lot of XRP, which would drive up the price. People started to guess right away, but what really caught my attention wasn't the mention itself, but what it was said in. It was a complicated talk. Larry Fink didn't say anything about speculation or trying to trick the market. They were about new ideas, technology, and the future of money. He talked about how blockchain could change everything. It's important to know that BlackRock recently got approval for an Ethereum ETF, but that's not the same thing as direct XRP involvement. The two are different things. Putting Ethereum and XRP in the same category is confusing because they are not the same thing and are meant for different business use cases. Each plays a different part in the changing business world. To learn more, BlackRock has submitted a blockchain patent, US 22-4007-8563A1, that is all about tokenized asset transactions. This shows that they are very interested in using blockchain technology to change the way standard financial systems work. This invention gives us a lot of information about their real goals, which include a bigger plan to use blockchain in regular banking. BlackRock is not just buying XRP as an investment, they are also looking into how to use Ripple's XRP ledger technology to change the way assets are paid on financial markets. This might have the ability to change everything about asset management. It is possible that tokenized asset settlements could make deals, especially cross-border payments, much more efficient, faster, and cheaper. This new idea could make the world's banking system more connected and smooth. XRP is perfect for this use case because it has fast settlement times and low transaction costs. These qualities are very important for the future of online money transfers. This is a lot more important than short-term price spikes because it shows how important XRP is as a utility token built into the banking system. This could have very big effects on how financial companies work around the world. Larry Fink also said that central bank digital currencies, or CBDCs, would happen eventually. This fits with BlackRock's larger goal of making the world's economy fully digital. CBDCs are the digitalization of national currencies by central banks. To make deals instant, safe, and clear, they will need strong payment rails. It's already clear that Ripple's technology can be used as a link between these new digital payment systems. Unlike Bitcoin or Ethereum, XRP was made to be scalable and compliant with regulations. This makes it appealing for large organizations to use. BlackRock is interested in XRPL patents and blockchain infrastructure because they think that traditional banking and blockchain technology will eventually come together. It's interesting that BlackRock's current crypto stock is said to be worth about $16 billion and is made up of different crypto assets, but XRP is not one of them. This lack tells us a lot. It's not like BlackRock is hoarding XRP as a gamble. Instead, they are focusing on building Ripple's technology into their systems to make asset transfers and payment systems easier. This strategy isn't so much about changing the price of the market in the short term as it is about building things that will allow growth to continue for decades. This difference is important for buyers and XRP fans because it changes the story about the coin. Instead of following crazy price guesses based on rumors and hype, it's smarter to keep an eye on how institutions are adopting the technology, how regulations are changing, and how technology is improving. XRP could become the main currency used for international purchases and settlements of digital assets. Real-world relationships between Ripple and global banks, payment providers, and now BlackRock show that XRP will continue to be in high demand and become more useful over time. A big change in the market could happen if BlackRock and other big institutional players are able to integrate XRP into the way money works. XRP could become an important part of global banking because it could speed up settlement times, lower transaction costs, and make things more clear. To reach this goal, however, regulations must be clear and technology must be strong. Ripple's ongoing legal fight with the SEC is still a big issue as regulatory uncertainty has made institutions less confident so far. BlackRock's careful approach shows that they are closely watching these changes and are ready to speed up adoption as soon as the legal situation gets better. BlackRock's impact could also lead other asset managers and financial institutions to look into similar blockchain innovations. A lot of patents, partnerships, and new goods that use XRPL technology could be filed. This institutional momentum is very important for XRP to go from being a speculative cryptocurrency token to a well-known asset in the financial system. The lesson is clear for small buyers and people who hold XRP. Keys are to be patient and keep your mind on the basics. It is very important to know that the market is not just based on rumors and hype. The excitement about XRP hitting $10,000 has nothing to do with supply and demand or the rules that govern the market. Investors should be wary of claims that are so far-fetched. The real value of XRP comes from its rising use as a bridge currency and settlement tool for big banks. Its long-term value will come from how useful it is. Knowing this helps you set reasonable goals and encourages you to think about your investments in the long run. Seeing the bigger picture and the room for growth in the future is important. To sum up, BlackRock's interest in XRP is not just based on price speculation. It shows a more comprehensive plan for how money will be handled in the future. The goal of this strategic, multifaceted project is to change how financial assets are handled by using blockchain technology. Changes like these are already happening. Their blockchain patent shows that they trust Ripple's technology and think it has the potential to change the business. Their cautious approach to investing shows how important clear rules are. Understanding these regulations is important for long-term success. XRP's future will be shaped by this complicated dance between new ideas, government rules, and adoption by institutions, not by trending tweets or price guesses. The success of XRP depends on how it is used and accepted in the real world. Finally, people who want to know what will happen next in the crypto market will need to keep a close eye on BlackRock's moves, Ripple's partnerships, and governmental updates. BlackRock is paving the way for a new era in which digital assets like XRP are extremely important to world banking. People who know about and follow these deeper trends will be able to gain the most from the change that is happening now. Sign up now to get full updates, analysis, and expert opinions as this story develops. Right now, the future of banking is being written, and XRP plays a much bigger part than most people think. For your protection, this video is only meant to teach and explain. It's not advice about money. Before you decide to invest, please do your own study and talk to a financial advisor.